What's going on in Manhattan real estate sales market? Let's take a look at the third quarter 2020. This quarter began just over a week after the COVID lockdown ended, and it reflects sales contracts that were signed during and after the COVID lockdown. We noticed a slight improvement. The number of closed sales edged up a bit from the previous quarter, which bodes well for the future, or at least we hope so. The number of sales fell 46.3% to 13,075 from the same period last year, the second most significant year-over-year decline in 11 years after the previous quarter decline of 54.1%. Over the past decade, third quarter sales averaged over 3,000, or roughly double the current quarter result. In a change from the prior quarter pattern, sales above the $5 million mark did better than the market average. The starter market softening activity ended up skewing the average square footage of a Manhattan apartment upward by 30.9% up to 14,023 square feet. As a result, the average sales price and the median sales price were also skewed 31.6 and 7.3% respectively, with the average sales price that turned above the $2 million threshold, while the median sales price rose to $1.1 million. The average price per square foot saw a nominal uptick of 0.5%. These price increases reflected the shift in the mix of apartments that were sold and do not represent a housing market with rising prices. So don't be deceived by that. Listing inventory rose to 9,319 units, and consider that the record was reached in the first quarter of 2009 at 10,445 units. The months of supply, the number of months needed to sell all listing at the current sales rate, was 20.3, a speed that is less than half of the year-ago pace of 8.6 months. The slowest pace on record was 26.2 months, set in the first quarter of 2009 during the financial crisis. So from this perspective, we are currently faring better than the Great Recession. The days on market, the average number of days from the last listing date to the contract date, was 143, the longest marketing time since 2012. Marketing time expanded 57% over the past year, which is not surprising given we had to deal with a complete lockdown. Listing discount, the percentage difference between the listing price at the time of sale and the sales price, continued to show the most negotiability in a decade, rising to an 11-year high of 8.9%, up from 5.1% a year ago. The rise in negotiability is consistent with the increase in listing inventory and the decline in sales. Despite the challenging times during the COVID crisis, there were still bidding wars going on. This share of bidding wars is at a very low level, 3.6%, the lowest level in more than 11 years, and well below the 31% average of 5 years ago, which was essentially the peak of the market. This is it for today. Call or text me if you have any questions. I'll see you in the next one.